Hello and welcome to Sectors Up Close. I'm Ramzan Karmali. Today we're going to talk all things silver, and my guest is Russ, Mould, Investment Director at AJ Bell. The price of spot silver has pulled back since hitting a 2013 high in May. The precious metal has been tracking the trajectory of gold, which hit a record high also in May, with investors using precious metals as a hedge against inflation. But as our guest today recently pointed out, the price of silver is still below its historical average when compared with gold, while the run-up in silver prices has failed to boost shares in silver miners. So what's the outlook for the metal and the miners? Well, let's ask AJ Bell's Russ Mould. Russ, thanks so much for joining us. So let's look at the price. I mean, why has it had this retrenchment recently?
Well, I think, first of all, it had a thumping good run before that. So somebody may have decided they've just had a little bit of fun and thank you very much, it's time to lock in some profits. And they may have been prompted to do that by the fact we have seen inflation cool, which is what central banks want to see. And that has led to interest rate cuts from the Swiss, the Swedes, the European Central Bank, raise ups, the British and the Americans will finally get around to it, the Bank of England and the Fed, and that would maybe perhaps take away one of those reasons for holding silver, namely a hedge against inflation.
Talk there about inflation. I mean, how important is that for the price of silver?
It's been a huge sentiment driver over the past few years. I mean, silver has gone into a very, very good run when inflation accelerated, and there were fears also that the US economy would run hotter for longer, stop the Fed from cutting rates, or at least until it got inflation under control. So it's been a key part of the investment case for silver from precious metal bugs. I know that's not everybody, but those who are into them, that's one of the reasons why.
And what about the demand outlook? I mean, industries like solar, for instance, do rely on silver. Has that supported prices?
It should do. I mean, silver used to be a huge important material for photography, not such an important industry for anybody anymore with the rise of the digital camera. But solar would be a definite demand-side pull, and there isn't an awful lot of fresh supply coming on stream. And if one of the things that's been maybe working against Fresnillo in Mexico is the government there is talking about banning new open-pit mining. So supply still feels relatively constrained, at least.
Now, in your notes, you talk about silver being relatively cheap compared to gold, but is that comparison still valid? Historically, that's always been the case. But
I think if you're a precious metal bug, yes. If you're not a precious metal bug, then I don't think you'll care in the slightest. But yes, at the moment, gold around $2,300, silver 29. That's about 79 times. The average is 65. So if you look at that historic relationship and you are a precious metals fan and think there's a strong case, you could argue silver is the cheaper way in.
Now, it's always been a metal that people have speculated about. Is that still the case? Is it one that you just take a punt on?
That's all the way back to Nelson Bunker Hunt in the late 1970s when he and his brother tried to corner the silver market and came unstuck when the regulators decided that actually cornering a market wasn't in any way ethical or appropriate. I think the challenge that you have is, as Buffett would point out about gold, Warren Buffett, doesn't generate any yield. So it's a metal. Silver has more industrial use than gold, but there's no yield. So if you're looking to value it intrinsically, you're going back to the all-in sustained cost of production. For silver, that's probably around $20 an ounce. That's below the current spot price. If you're a real fundamental cash flow person, you probably won't get involved. Or if you want to, then you have to look at the miners because they are capable of generating cash when things go well.
Well, you brought up the miners there. What's your outlook for the miners?
Well, I think it's interesting that Fresnillo and Hochschild Mining, FTSE 100, FTSE 250 company, they're trading back where they were in 2009 when silver was half its current level. So if you're into silver, you would think that miners would be a geared way into that. You might, and again, there's cash flow, there is potential for dividends, even if Fresnillo cut its dividend last year. But again, you've always got to look out for local regulation. The Mexicans are tightening up. And 12% cost inflation last year in Mexico was a challenge for these big miners. Hochschild operates in Brazil and Peru, so slightly different dynamics there. But it's the same old story. You have to look at where they operate, what their cost base is doing, and, of course, what the underlying commodity price is going to do.
So should you hold silver? And if so, should you hold it in physical form or perhaps in an ETF?
If you're in the inflation camp, I think there's an extremely strong case for it as a store of value. And if you believe that debt will get out of control, and let's face it, the Biden government's added $7 trillion of debt in 4 years. It took America till 2003 to borrow that much. So if you're in that camp and are frightened of rates having to stay high because of inflation, ballooning the American interest bill, leading to more money printing, then that's a really strong case for silver. Then I personally think the miners do offer more leverage into the silver price, but they do offer more risk because of things like cost inflation, local taxes and other challenges. So again, you've got to balance what your risk appetite is against the rewards that you're seeking.
Russ Mould from AJ Bell, many thanks for your thoughts.
Thank you.
And that is your look at the outlook for silver. I'm Ramzan Karmali, and this is Reuters.